He is Loomis Sales and Company Equity Portfolio Manager. He is here with 3 big stock picks to make you money. Hi there. And we have Dennis Neal and Adam Shapiro standing by as we wait for Dell and JCPenney earnings to come out. Adam, we got Dell. Go ahead, Adam. What are the numbers?
Well, on earnings per share, 21 cents. The street was expecting 35 cents, but remember what was leaked to the Wall Street Journal was 20 cents. So the non-GAAP earnings per share, 21 cents. Revenue beating what the street expected and beating what was leaked to the Wall Street Journal, $14.1 billion. Quote from Dell, we made progress in building our enterprise solution capabilities in the first quarter and are confident our strategy to be leading provider end-to-end scalable solutions will prevail. Well, I'm going to dig into this and find out what's going on with the computer, see if they talk about the fight with Carl Icahn at all, David.
You dig. Meanwhile, we're going to go to our man at the CME, Larry Shover, who's really been focusing on what these numbers mean. We're not seeing much action at all after hours. What do you think of those numbers?
I'm not at all surprised with these numbers. What I'm more surprised is why is Carl Icahn and Michael Dell fighting over a company when everybody thinks the PC is dead? There's something going on behind the scenes. It's got to be a very good company. I do believe that Michael Dell is going to resurrect the company and work on like software and on network storage, etc. People have written off the company, and I don't think so. I mean, these two guys are way too smart. Options were implying really nothing. There's more to the story that meets the eye, and we're not seeing it right now.
Okay, we want to bring in Jeff Fittacaro. He's a Dell analyst for Monness, Crespi, Hart & Company. Jeff, when you look at these numbers and you get the first blush here, we are seeing a bid and an ask that is just pretty much right around where the closing value is. Is there any validity to what Larry was just saying down at the CME, and that is something's up here? Can this company, as it turns private, transform itself into more of a server opportunity or software versus just a PC company, which we know is really losing a lot of shine?
You know, that's a great question. What happened here is the revenues came in at $14.1 billion, which was actually slightly better than the $13.5 the street was looking for, but gross margins were well below the street. So there might have been some heavy discounting to get there, but surprisingly, the PC numbers were about as we expected, about down 14% year over year. So that was not the cause for the miss. So we have to kind of go through these numbers a little bit further.
Well, one thing that we've already found out is they're not providing any outlook for the second quarter, Jeff. Does that concern you?
No, they did this last quarter as well. They pulled guidance once they started talking about the LBO offer, so they're not giving us forward guidance. I'll mention one thing is that, there's some conspiracy theory here that they're actually, the numbers are lower.
Yeah, they're lowballing. The conspiracy, just to emphasize for our viewers, is they're lowballing the estimates to make the LBO look even sweeter than it is, right?
Yeah, I mean, my take here is really, our sense is that really Dell's management's not likely intentionally posting weaker numbers, but, our checks did show that some of this LBO distraction was hurting some of the deals. Now, that was, wasn't a big deal when we talked to some of the resellers. These are, Dell's channel partners and distributors. But
well, Larry Shover, the offer by Michael Dell and Silver Lake was $13.65 a share. For a while, the stock was trading above it. Right now, it is finally below it. So you look at that and you say, well, now perhaps that deal becomes a little bit more attractive to shareholders who currently say, why are we getting lowballed on this? It's no longer a lowball offer.
Yeah, that's a good question.
Yeah,
prior to our, going to neutral, we had a $13 price target. So $13.65 we thought was a fair value. It's about 10 times free cash flow and about 9 times on a PE basis.
Okay, let me let Larry Shover comment on that. Go ahead, Larry.
No, that's okay. When you look at the options market, the options were implying a little bit lower than that. That is exactly what the company was worth. So investors actually might be being saved as opposed to being lowballed on his price.
Well, let me go back to Jeff for a second. Of course, the Carl Icahn deal is a $12 bid with extras. Is there anything about what Carl Icahn is offering that shareholders would find better than what Michael Dell is offering?
Yeah, the question here is that the $12 is special distribution or a special dividend, or you could take $12 in stock, but you will still be a public company, right? So now, if you look at these 20 cents earnings, well below what the street was, we think that Dell needs to sort of, back up here and transition more into enterprise solutions, and I think that's going to be harder under the watchful eye of public investors.
So again, you're thinking that the Dell deal looks better than the Icahn deal?
That would be our opinion.
Yeah.
Okay, let's get right now to Adam Shapiro. You're looking at more headlines. Again, they're not going to be providing any guidance for Q2, which is interesting. Of course, the guidance turned into a little bit of a situation this time around.
And whether you believe the company is in trouble or you believe that, the end of the computer, they're trying to make things look better for Michael Dell's plans to take them private, the end-user computing revenue was $8.9 billion in the quarter, but that's a 9% decrease. Operating income for the quarter was $224 million, a 64% decrease. If you look at the non-GAAP operating income, it came in at $590 million, 42% down from where that was a year ago.
Now, we had Dennis Neal focusing on JCPenney, but he's also been looking at Dell, and he has some opinion here. Go ahead, Dennis.
Well, I was just listening to some of your guests debate the real worth here, and my gosh, if the PC business is dying, why do so many guys want to bid for Dell? Let's remember that aside from laptops, those big servers in the back shops of big IT departments, Dell is big in that business. It still has a loyal customer base, and it's like a utility that gets this recurring revenue. We used to think that IBM's big server business was worth nothing, but today it's one of the big things that keeps IBM going. Dell has that. The other thing is, in looking at the Michael Dell bid versus the Carl Icahn bid, I know that Michael Dell has failed to get this stock up for a couple years now, but who would you rather have still involved in that company? Michael Dell, who invented it, or Kyle Icahn, who's just a carpetbagger?
Well, and Larry, that's the question. I mean, who knows more about the market and, of course, the internals of the company than Michael Dell does? I mean, Carl Icahn is a great investor. He has done magnificent work in finding value in companies that are undervalued, but who knows the internals of Dell better than Michael Dell?
Yeah, nobody does. And to the point, you have a guy like Carl Icahn fighting for the company. There has to be something that's worthwhile, whether it's a $13 or a $15 or a $25 stock. There's something worthwhile there with Michael Dell and what he wants to do with the company, with network storage, with software solutions, and with the existing PC business that we do know is.
Jeff, you're listening to this, and I'm thinking to myself, I don't know. I mean, it was under Michael Dell's watch and the previous CEO where this thing lost its market share to Hewlett-Packard. I mean, how did that happen? And then you look at how slow they've been on everything when it comes to what people looked at Dell for. And I think to myself, okay, fine. Adam just pointed out that you had a 9% drop in certain metrics here. What do you think? Is that the reason that these numbers were such a miss?
Yeah, you got to remember, still here with Dell, there's 50% of the revenue coming from PCs. And if you take out just enterprise solutions and services, including software, that actually grew 12% year over year. So, and if you exclude the acquisition of Quest, which was very recent, it still was 8% growth on an organic basis.
So it looks better that way.
They are executing on the other businesses outside of the PC.
Well, this conundrum may be solved by information that Adam Shapiro has been finding within the numbers. Go ahead, Adam.
I want to go back to what Dennis is right. The PC is not dead, and we saw this. It's an old note from Bernstein Research, but they had pointed out that when you're in a market that sells roughly 360 million PCs a year, and that's falling, but most PC purchases, 75%, are replacement PCs. And in that Bernstein note, I know you've seen this, Liz, that Bernstein note talks about there will essentially come a point where they will hit bottom, but they won't continue to fall. And so the replacement period of every 3 years will now be 5 years. So there's still going to be over 200 million plus PCs sold every year going forward.
Okay. Everybody's staying with us, although Jeff Fittacaro has to go. We appreciate your input, Jeff. Thank you so much.
And David, don't be concerned. We're bringing you back in a segment all to your own with Larry Shover. We haven't even heard about JCPenney numbers, and those numbers are going to be huge. That really could affect the future of this company. We're going to have David and Larry come back to talk about that when the numbers come out.
So we'll come back with our all-star panel in a moment. Plus, Street All-Stars, our week-long series with the Street's master stock pickers.
David Sowerby from Loomis Sales and Company, and Larry Shover to help us out as well. Guys, thank you so much. David, thanks for sticking with us. David, let's talk about revenue, because that has been the bugaboo of this earnings season, that a lot of companies have done well on the bottom line. They beat expectations, but not so on the top line in revenue. Is that going to be a drag going into the next quarter?
It's at least going to be an uncertainty. I'd give the first quarter earnings reports a B. Importantly, cash flow about a B+, but earnings get about a C. And that's real. I think one of the risks to the market is it's not Europe. We know Europe is weaker.
But it hasn't hurt. Here's the point, David. Forgive me for running you ahead here, but this is the point, really, is that the revenue hasn't hurt the stock market at all in the first quarter. This has been the most spectacular first quarter, I think, in history, if not in history, at least in my lifetime. So it hasn't hurt. Will it drag the market down in the second quarter, though, if revenue continues to be a drag?
Not unless revenue in the economy has a more material deceleration or disappointment. 6 months now from the November 15th lows. Small cap cyclical stocks are up better than 30%. Large cap stocks about 26%. You're right. It's been a terrific run. I think it's really a run on the back of good valuation, good cash flow, good dividend growth. That's been the key ingredients to stock prices moving higher. At the same time that most pockets of the bond market, year to date, they're up less than 1% unless you're in the high yield markets.
Well, yeah, I mean, and Buffett was just saying, Warren Buffett was saying at the annual shareholder meeting, flat out, treasuries are not going to give you any yield at this point. So let's get right to what will. You've got 3 picks right now. I want to get them up on the screen because we're still waiting on the tape for JCPenney's numbers to come out. So let's get your numbers right up off the bat. Dresser Rand up 40% with a PE of 14. You've also got Trinity Industries that you really like, and then Qualcomm, which was a pick from last time around. Let me get to Dresser Rand. What entices you about this company?
It is my belief that we're, in baseball terms, bottom of the 3rd inning in this whole energy infrastructure story. Here in the United States, they make turbines for production and the aftermarket. I think that's a great play in the energy infrastructure story. And to quickly move on, you know, Trinity is the same story too, Liz. It's a transportation company. They do rail cars, barges for hauling gas, pipeline expansion. Those are 2, I think, important energy infrastructure stories that have more room to run, and they're more in the small mid-cap area of the market, which I like, where there's going to be more acquisition activity. Right. Not to say that these 2 stocks could be acquisition candidates, but I think you're going to see that as a positive catalyst.
Hey, Larry,
as well.
the thing that's interesting about David picks is they really do rely on a strong economy, an underlying economy, because these are industrial stocks. These are stocks that move with the economy. And today we got mixed numbers on the economy again. The jobs numbers disappointed. The housing numbers disappointed. So that story is not settled, is it?
It's not settled. And the third bad number is the CPI for April, causing gold to go down. However, at least the private sector is moving in the right direction, about 3% growth. It's not growing, but we're going in the right direction. And to David's point earlier, we have like a severe output gap in the economy that's going to keep wages low, and it's going to keep cash balances for the private sector and the corporate sector high. So it's artificially going to continue to keep our stock market perhaps higher than the economy would suggest.
Larry Shover, David Sowerby, gentlemen, thank you very much. A busy day. Appreciate you being here.
Pleasure.